Hey, this is Justin with DayTradeTheMarkets.com. It's Monday, June 19th, 2017. Thought I would just do a quick video on the idea of a breakout trade, some pros and cons, and we have kind of a five-step checklist that we like to go through. We were talking about this today in our live session, so I thought I would just do a quick video for those that weren't in that live session with our members, just because I think it's a helpful way of looking at this trade. So, a breakout trade, there's a lot of benefits to a breakout trade. I mean, there's some of the most powerful trades that you can find. And when I say a breakout trade, I mean basically making a new high or new low and just going with that trade, not waiting for any pullbacks or anything like that. They're a very powerful trade, and when they work, they're great. The challenge is they don't work in a very high percentage of the time, right? There are a lot of head fakes. There are a lot of times where if you're trying to catch a breakout, the thing turns around on you right away. And so they're a very dangerous or a very aggressive trade. So the key is, if number one, you have to be aggressive in general to take breakout type of trades. But if you can eliminate, it's not so much about trying to catch all of them. It's more about being able to eliminate the less high percentage breakout type trades. And if you can do that, then you can make the breakout trade a pretty profitable trade in general. So what I thought I would do is just look at an example from this morning in the ES and talk about it in terms of kind of the five-step checklist that we like to look at. Basically, the way I think about this is, if you have a breakout trade that all five of these are in place, then you've got a trade that, unless you're very conservative, it's probably worth at least considering taking. If you've got four out of the five, then I think as long as you're an aggressive trader, you've got good odds on that. Once you get down to only having three of the five, you have to be really aggressive if you're going to take it. It's not going to be that high percentage, and only if you have only two or one of the five, they can work, but I wouldn't recommend doing them. I think they're relatively low percentage in that. When you have only one or two of those pieces of evidence. So let me talk about what those pieces of evidence are. Number one, and this will be for a long trade. Obviously, you could reverse the logic for a short trade, but so number one is that we want to prefer that it's with the big picture bias. Okay, so if we look at this one as an example, right here, this potential long as we're breaking out right there, is that with the bigger picture bias? Yes, it is. Our bigger picture bias was up heading into today, and that's something that we post on what's called the Daily Market Assistant page each day in our member site. And so that has one out of the five. The next question is it breaking through something? And what I mean by that, it could be breaking above the high of the day, could be breaking above what we call a box high. Like in this case, we have a couple boxes that had formed at that point. Buying boxes were starting to stack. That also is another piece of evidence that's helpful. But are we breaking above a box high? Are we breaking, in this case, which doesn't happen very often, but are we breaking above an all-time high? The key is it breaking through something? And clearly, in this case, we are. Is it breaking out with a level 2 or level 3 aggression bar? Okay, that's the next one. And in this case, it's breaking out with a level 3, or what we would call an extreme buying aggression bar, showing that there's a lot of buying in the market at that moment in time. That's, again, just giving us another piece of evidence that buyers are trying to come in with pretty good strength. The fourth clue, or the fourth evidence piece, would be, is it taking out what I would call an attempt by the other side? In other words, is it taking out, in this case, we're thinking about a long, so have the sellers tried to come in a little bit earlier, and are we taking those sellers out? In other words, are those sellers having to flush their position? And in this case, you can see when we came within a tick or two of the all-time high, we had some sellers that started to come in. Okay, now obviously there was more buying, but started to see a little bit of selling. We had a level 2 selling bar, a little follow through. The buyers tried to come back in, couldn't get anywhere, had a battle with the more sellers. So there's a battle going on right here at what was that time the high of the day. So the other side is making an attempt to come in and pick off these highs. And again, these aggressive sellers that are trying to pick off these highs of the day, and it's not a bad spot to be looking. It's near the all-time high. They're taking the idea that, hey, if they're right, they have a very low risk and they can pick off the high. And if they're wrong, then they're wrong. But what that tells us is, if these sellers here are wrong, they're going to get flushed out, and that can really add some fuel to the fire if you think about it like that. So it's got four out of those five. And then number five, it's not breaking into an area of expected resistance. Okay, now obviously if we're breaking to all-time highs, then there's nothing up there that we would know about that could give us any potential resistance. Okay, so once we broke the all-time high, this is uncharted territory. There's no resistance up there. Now at some point we might, the air might get a little too thin, and we have to come back down for oxygen. But at that moment in time, there's nothing that we were expecting to give resistance at that point. So if you look at this idea here, if you're taking a breakout right in this area here, there's nothing to it's got 5 of the 5 evidence pieces. There's nothing to, if you ever consider breakouts, this has everything going for it. Okay, and then once you're in it, there's a couple ways you can think about getting out. One would be as soon as you see the first sign of any kind of strong selling, you could get out right in there. Another would be you wait for there to be really, a pretty good follow through below a selling bar. In this case, we didn't. I guess we got it a little bit right here, so that's not bad. But another way would be wait for another attempt here. We tried to go to new highs again, and some good selling came in, and we had immediate follow through from that selling bar. So a couple different ways you can get out, but you want to follow the evidence. Again, this one didn't go to the moon, but it was a nice little breakout that took off early in the day before the market kind of settled into some consolidation later in the day. So anyway, hopefully that helps. It's all about trying to manage your evidence so that you can put yourself in a little bit better position than not. And I think that's a good way to kind of take the pros of the breakout trade, which is a good trade when they work. The cons of the breakout trade is that they don't work all that often, and you can get yourself into trouble. So if you can eliminate some of the bad ones, I think it can obviously it can be a benefit to your bottom line. So this is one technique that we use that you might find helpful. All right, thanks a lot. If you have any questions, let us know. We'll talk soon. Thanks.